one of these companies in the portfolio. This is a question from Steven. He says, you bought the most of NVIDIA. Again, we talk about that 5% allocation in your first purchases. And they say, I see it continuing to gain up to $135 per share. And I don't know if I see upside from there. What am I missing? Is NVIDIA capped at $150 a share? Is $200 a share realistic? Thanks for the show. And again, they note that we kind of have been in that $130 per share range. It's had some volatility over the last couple of months down to near $100, but it hasn't really broken out beyond that 130. So maybe address the question, what gets it to beyond kind of this range? I mean, it's silly to talk about being range bound over 3 months or so. We're not talking years of being range bound here, but what gets it to break out to that 150, or is 200 possible? What kind of has to go right for the company for that to happen?
Yeah, so when we had purchased NVIDIA, we got in the portfolio for less than $120 a share. It's up more than about 12% right now as we film. That's a very good move in a short amount of time for a mega cap, right? Like, we need to acknowledge NVIDIA is no longer the kind of stock that's going to see the returns it did in the past, but we believe it can still see very attractive returns. So what's been driving the stock recently? It's not whether or not it's on a breakout from MACD or all the other chart explanations that you could look for. It's pretty simple. People, they're gabbing, they're talking in the background, and NVIDIA's talking with analysts, and the chatter is generally very good. The biggest news story this past week, NVIDIA their executives met with Morgan Stanley and said that they are sold out on Blackwell demand. You know, David, that's a question that you asked me on the first episode of this show. Is NVIDIA, are they someone who can meet the demand, or are they still demand constrained? We have a definitive answer that they are still constrained. They will sell as many Blackwell chips this next year as they can make, and that is the limiting factor. In some other news, we have AMD saying that the accelerator market, which is, just AI chips for processing, they had previously believed that it would get to $400 billion by 2028. They are upping their estimate. Now, this is important because AMD is not just saying this because they want some free publicity. They're saying it because they're talking to customers. They're triangulating from their customers where they think demand's going to be. And this is where customers believe the market is headed. Whether or not the market actually gets there, hey, that's going to depend on a few things, whether or not these companies can keep funding it, whether or not AI models keep growing. But when you get data points like this, it's very important to kind of take them and ingest them into what you believe is the potential for the market. And 500 billion, that is a significant jump from where a lot of the market is kind of pricing these stocks in. So let's just walk through that for a second. David, we've talked about NVIDIA's earnings per share. Right. And, it's kind of a simple, for all the talk of all the guests on CNBC trying to say it's a total bubble versus, it's still a raging buy. You can really break down what's happening with NVIDIA quite simply, which is that Wall Street right now has them at about $4 in earnings per share next year. So if they're $120 and they're paying $4 a share, they're valued about 30 times next year earnings, which is about market average in the current environment, a little above it. My belief has been that NVIDIA is still underestimated and will likely break $5 a share. So if you're breaking $5 a share in earnings and you're at $120, you're at 24 times earnings. That puts you around market multiples to a little below them. Well, one of the big jumps this past week is we ingest that information from AMD. We ingest this kind of Blackwell demand picture. And you start wondering if NVIDIA can actually start looking for something closer to $6 per share in earnings, which would be another year of incredible growth for the company. How you get there? Well, there's some estimates out now that they could get $210 billion in data center sales. You take $15 billion worth of other sales, like their graphics cards for, PC enthusiasts, you get up to about $5.15 in earnings. If they can actually produce more Blackwell chips than current expectations, which again, it's not a demand problem at this point, it is how many they can build and get up to say 230 billion in data center sales. That gives me a rough estimate of $5.60 in earnings. So once again, you just divide current share price by that number and you're able to start a arriving at where NVIDIA could go. And generally, those prices are very attractive, even at $135 per share. So, David, how do they get out of the range boundness that they've been in? They keep pushing that EPS number up, and they're going to get out of that range. Now, let's just take a longer term view for one moment. That AMD estimate, I said, let's start taking these data points and triangulating where we'll go in the future. Right now, Wall Street, their prediction for NVIDIA's revenue I've got right here in 2027 is $227 billion. I just gave you a path how they can beat that next year. So if you're trying to see how far behind Wall Street might be on NVIDIA, they might actually have the 2027 revenue low enough that they're going to beat it this next year. If AMD's numbers were correct, 500 billion in data center sales, NVIDIA even loses some market share on that. They lose some margins. My estimates could have them at, in 2027, up to $8.50 in EPS. At $200 per share, divide that by $8.50. That would be about 23 times earnings that year. So this is all to say, can NVIDIA get up to $200 per share? A resounding yes, if these expectations that AMD is kind of seeding into the market, and I genuinely believe they have ascertained by talking to customers, come to be. You know, I know it feels so complex. There's so much stuff out there. Investing is never about knowing the most about a company. It's being able to really dial in on the right few pieces of information. And I believe understanding these few pieces of information will allow anyone out there to kind of understand the story behind NVIDIA and the drivers in its share price. So again, if you're asking, why are we buying NVIDIA $130 a share? We had actually gone at sub 120. This is the reason why. This is the data I am looking at. And I believe for a large mega cap, this is still pretty attractive, David. Wouldn't you agree?
Yeah. So when you think about $200 per share, 130 today, it sounds like what you're saying is the two paths of getting there are the earnings growth over the next, call it 1 to 2 years, which we do have decent visibility into, or you can kind of lay out the path of they're able to ramp Blackwell more than they're anticipated now in terms of able to sell more. But then you also have, in 2 years, the future also looks to be continuing in that demand. So there's the uncertainty of what does 2028 look like? And we played that quote from David Tepper 2 weeks ago, where that's where his concern was. It says, hey, maybe you get to the earnings growth over these next 1 to 2 years, but it's really years 3, 4, 5 that have me worried. So is that why we're not higher than 130 now? Is it those out years? Or is it they may not be able to grow earnings, that kind of bull case scenario that you just laid out of, where do you kind of put the weighting of why aren't we there now? Because if we had greater visibility, the market may already, maybe we'd be trading at 180. Is it really those out years that are going to continue to be an overhang on what that future multiple might be?
Yeah, 100%. There's two primary weights on video right now. Number one, even if they achieve the sales, can they maintain margins? I actually took their margins down about net margins down 3 or 4 percentage points for that kind of 2027 look ahead, where I arrived at $8.50. So I am expecting margins to see some degradation over time. Second, just as you said, right now, these talks of $500 billion in AI accelerator sales are predicated on plans that are being made, plans being made by Microsoft to buy nuclear power plant, allocations, plans being made by all these companies. They will continue spending. If the models don't continue growing at the rate that they do, if consumers do not begin taking the outputs from these AI models in much larger numbers, and companies as well, and in addition to that, if the models do not see the current rate of progress we've seen, those are all things that add uncertainty. So right now, the market is actually, in a way, saying we want to pay less for an NVIDIA than a company like Apple that is very growth constrained, but you know what you're getting with Apple for the most part. If NVIDIA can prove much more that this growth is continuing, their dominance is secure, and that people feel good about this, continuing wave of AI spending, they're going to re-rate to a higher multiple. Right now, a lot of that $200 case is predicated on them trading at a discount relative to their technology peers. So I am comfortable with a scenario where they can achieve above average growth, good growth for an outsized position, even trading at a lower multiple than their peers. So in a way, I'm almost baking in this uncertainty into how I'm looking forward at the company.
That makes sense. Great. I hope that answers the question. And for the portfolio's sake, hopefully we get to 200 sooner, sooner rather than later. I mean, it sounds 200 from 130. It's such a big jump, but then you think about NVIDIA did that many times over the last couple of years in terms of percentage gain. So it has a track record of surprising to the upside. So
Yep.
I personally wouldn't be shocked if we see that, but obviously we'll